All right, Ralph. So I was blown away when we got together in Tennessee. What were we there for? The RPM conference.
Yeah, yeah,
Irony of the
Naples.
shirt, right? We were there for the RPM reunion. And you started, Jordan told me, he's like, hey, he's got a syndication conference. We started talking, and it occurred to me that like the property management business was a fraction of your time and attention, and that you were doing some big things. So I'm constantly wondering why our clients in the industry aren't acquiring their own portfolio, doing things like you're doing, investing in other things. So I just want to start kind of from the beginning. Were you already a real estate owner before you started the property management company, or did you start property management? Like, which came first for you?
Yeah, honestly, I was an investor first. I had one single family home that I was house hacking. I didn't even know what that was. I just had roommates living with me. And then I had a college buddy that came to me and said, hey, why don't we put some money together and let's just buy a duplex. And we started looking at around Richmond, Virginia, and we actually bought an 8-unit building instead. And at the time when we were closing, I remember my broker, she asked me, she goes, oh, well, who are you going to use for property management? And I said, I didn't even know that was a thing, but I was like, I'll just do it myself because I lived around the corner. I thought this would be easy. I didn't even know that the industry existed. And that was,
Which, by the
2012.
way, just a side note, so many of our clients, like,
Yeah.
the fact that you didn't know, like, that it was
Yeah.
just, all of our owners need to hear that, like, there's so many people that have no clue what we do, even though
Right.
we
Yeah.
did. So I
And
know I
I,
agree with you, but
I was completely clueless. That was 2012. And then 2 years later, I'd bought another property and I said, I either need to do this full time or stop, sell everything. And I jumped in full time and found a real property management and bought a franchise in 2014. And we've been growing that ever since.
amazing. And you've got some impressive numbers you shared with me. Share whatever you're comfortable with, but share kind of with us, like, how many are you an owner of, and how many is in the syndication fund?
Sure. Um, so for the management company, we've got an office in Richmond. We've got a satellite office in Stanton, Virginia, a smaller market. But those two, we manage about 1,400 units. And then on the investing side, I've got an ownership stake in about 580 different properties. So that's 580 units, right? A 20 unit building, 20 is one property, but 20 units. So um, that I've grown since 2014, really the last I would say 2017 is when I started using other people's money and syndicating and deals. And that's, mostly in Virginia, Georgia, some in South Carolina as well.
Okay, good, perfect. So that was my next question: is do you manage all your own units? But it sounds like you're diversified geographically.
I am for sure. When I first started buying properties, I was using as a way to kind of grow the management business, right? I figured if I was the end customer, I wasn't going to fire myself. And so if I bought a new building, that was another door to manage. Uh, and I was buying deals that were kind of tight on cash flow, right? So I figured if I could manage it, I could massage the numbers and, waive a fee here or there. And then once I got a little more sophisticated, I started realizing I don't need to control every aspect of this, and there's not enough hours in the day for me to manage my own portfolio. So I started buying in other markets and partnering with other property managers. I will tell you that 580 number. I would say only about 20 of those do I own without partners, right? So the rest of those are either joint ventures or syndications. So I always like group projects and teamwork, and it's better to share in the risk and the upside. So a lot of those I'll own 80% of, or 40%, or even down to 5%, depending on the deal.
Thanks for sharing that part, Ralph. I think that's something I want to key in on. So 580 units, about 20 are just totally yours. I think that so many people out there, like, they can't get started because they think they've got to do it all themselves. Like, I got to have, I get deals put across my desk all the time, and it's like, you need 60, 80K down. You got to do it all. Then you got to find a property manager that you trust. And anyone reading this or listening to this is already got a head start. But still, it's a lot, to just copy and paste that, do that every single week. So you found a way to get to 580 by partnering, right? So tell us a little bit about that.
Yeah, I mean, it was, at first it was just a pure joint venture, right? Jeremy brings 40,000. I bring 40,000. We each own 50-50. Over time, I realized in a lot of those partnerships, all of a sudden, Ralph's doing all the work and Jeremy's not doing anything. He's just cashing the checks that I send. And I didn't have the confidence starting out to really charge fees for my service, for finding the property, signing on the loan, doing all the work that goes into owning the real estate. And I think that's like any new entrepreneur or any new venture, right? You don't know your self-worth and how much time it's going to take. So you kind of give away your services. You end up working for free a lot. So over time, I realized, well, maybe I can charge an acquisition fee. So if it's a, $500,000 property, maybe I can get, 1 or 2%, on the front end, and people will pay you for your time to run that deal. And then kind of got into some more exotic structures with, general partners and limited partners, and a pure syndication where, we're incentivized with a waterfall structure on the back end based on the returns and the cash flow that we provide.
Great. Yeah. So obviously there's a whole nother article just around those terms, which are great. But it's amazing. So another property manager that's like, I don't know if I want to invest in my area. Like I'm just going to throw out, I don't want to blackball any area, but they're like, oh, right. I'm in Chicago. I don't want to be investing in Chicago. Right. We can reach out to each other managers like you who've got a fund or got something going on. You're like, hey, maybe just what do you have available, right? Like, is there, right. 10,000, 20,000, like what does it take to get started in a fund like you have?
Yeah. It varies, deal by deal. I think the first time we raised capital, the smallest check size we took was 10,000. And now I've got a fund out there where the minimum check size is 500,000. So it really runs the gamut, and it's a different kind of investor you're courting. But investing on
the takeaway is there's somebody out there for whatever your investment is. Would you agree with that? Like there's someone out there putting together something for you. Yeah.
Right. And there's, different return profiles and different risk tolerances. The guy that's trying to invest 20,000, versus the guy that's investing 500,000, it's a different level of conversation, right? And they have different return expectations. So I've kind of enjoyed that mid-market in terms of capital raising. But what you mentioned as far as investing out of state with other property managers really hits home. I've got a property manager out of California who is investing in deals with me in Virginia, right? For that very reason, he kind of got priced out of his market. He's moving cash to a cheaper market that has better returns. And I've done the same thing as well. I've partnered with property managers in Georgia and Indiana where they're running the day-to-day, and I can just be a capital provider or help them source the debt.
Amazing. Yeah. That's exactly what I want our audience to kind of understand is day to day, right? It's like if I'm in the business of running a property management company, I think of everybody as an individual owner. I think of 4 walls, a backyard, it's a single property home. Somebody's got to own that outright. It's just one person, intentional or accidental. Like it's an investor, which, a lot of our that's like what's smacking us in the face every day. And it's preventing us from saying like, well, actually, just like BlackRock and all these big companies, we can all just get together and pull some money, and I can own properties in all 50 states by the time I'm in my career, and I just don't think enough of us think about that.
Right. And we, that's our bread and butter, single family, small multifamily. But when you drive down the road and you see a 24 unit building, odds are that's not just a mom and pop investor. It's not a doctor or lawyer. If it's a $3 or $4 million property, there's probably a group or 6 or 7 people that came in together to buy that. And as a property management professional, if you can bring those groups together, get, some of your clients, the banks like to work with property managers. They know that you're going to give them the reporting they need. You understand the market rent, so it's less risk for them. So we've gotten more favorable financing terms. And then a lot of our clients, it's a way that we build further relationships and make them stickier, is that they may have 2 houses with us, and we had coffee or a drink, and they said, if you ever see a larger opportunity, let me know. If you've partnered with them for 5 years on a multifamily property together, odds are they're not going to fire you over a maintenance bill or something that goes sideways, right? They'll call you up, and that happened this week. This is a investor that's been with me for 5 years now. He said, "Hey, I've got this other duplex with you, and I got to talk about something. The manager did this or that, and can you just call me and tell me why?" And they're going to call you first rather than just fire you and move on. So it really strengthens the relationship and sets you apart as the expert when you can provide that service.
And you're providing, who's not going to fire you? What do you mean by that? It's the
I'm saying that, right. So I've got he started out as a client, right? He came to us with a triplex and said, if you see anything bigger, let me know. I'd like to invest with you.
Okay.
And then, so fast forward 5 years, he's invested in a couple deals, and we still manage that triplex. And he said, "Hey, the manager did something. Can you just call me?" They feel more comfortable rather than just being, what, screw these guys. We're going to move on to the next manager.
So am I understanding this right? You're kind of starting as the manager, but then now you're bringing them deals.
Correct.
So that's an investment or actual portfolio.
Right.
And now they're looking at you as way more than a property manager.
Correct.
I don't want to lose access to this, inside information.
That's right.
Be a bad word in stock trading, but inside information is actually the key to real estate. Am I right? So you want to meet people that have inside info.
Well, and that's why, property managers, and I did an interview right when I launched the franchise, right, the local business blog. And I told them, I still remember this is in 2014. I said, I have a goal of buying 5 houses a year, which I thought that was like such a reach, right? How am I going to buy 5 houses? But that was kind of my strategy. And then all of a sudden I got hooked, and I kept growing and scaling. But it was because I had that inside knowledge that you talked about, right? It's not insider trading, but as a property manager, how many times have you gotten the call that, "Hey, when Mrs. Haverkamp's lease is up, can you non-renew in 90 days because I'd like to sell the property?" And we've trained our staff as the very next question is, "Would you entertain an off-market offer? We really like Mrs. Haverkamp. She's a great resident. We'll buy the property from you, and we can keep her in place, and you don't have to deal with vacancy or painting or broker fees." So we've picked up a ton of properties just from having that conversation and training our staff.
All right, so I'm gonna skip 3 questions, Ralph, because that was actually what I wanted to ask. How many properties have you bought from clients? Because again, this is something I think property managers are just completely blind to. Like you said, the insider info.
Right.
It's a rental. Let's just say it's a rental. You know what it rents for. You know that there's a tenant in place. Think about buying a sweetheart deal, right?
Yeah.
So
yeah.
Have you done a lot of that?
I would say, probably 3 or 4 a year that kind of fall in our lap. I would say lifetime, maybe 40 or 50. Well, that's not true. I did one where we bought 100 houses from a client. But, you do, if you're looking for a target rich environment, and these are kind of the best deals we see, is that owner that has a tenant for 9 or 10 years, right? They're afraid of turnover costs. They don't want to pay a leasing fee, so they keep rents low. They've had a tenant for 10 years and they haven't dealt with it. The headaches of the turn and, kind of scare them. So we've done that where we say, listen, it's really going to cost $20,000 to get this thing up to market. Here's your rent ready quote when this tenant moves out, and flooring, paint, all this stuff. And oh, by the way, your HVAC is aging. They've spent all that cash flow for 10 years, right? So they don't have a reserve account with 20,000 to fund that. So they might say, you know what, let's just sell it. And at that point we say, hey, let's be fair. Why don't we get it appraised, and I can pay you, 80%, 75% of that appraised value. So we're very, transparent in the numbers. We're not trying to come in and lowball you. We're not, we buy ugly houses kind of model. Sure. We just say, hey, here's what we can pay and why. And if it works, great. And if it doesn't, we'll list it or introduce you to a realtor that can sell it for you.
Yeah, that makes sense, because you also have a relationship as their manager. And so you're just kind of you don't want to hardball them. You don't want to convince them to do something they don't want to do, because you got another business relationship with them, but you're getting first access to the deal, which is amazing.
Right. There's value in that knowledge. Ask, any wholesaler.
So 3 to 4 deals you think a year fall in your lap.
Yep.
And then maybe 50 over the career, which is amazing. It's more than most investors ever even have access to. So I just want to celebrate that for a second.
Yeah. Thank you.
Like you do really get, if you're playing at your level and you've got your eyes open and your head on a swivel, you're probably going to see more deals than most. Like you're not making 1,000 phone calls a week like some wholesalers are, right? You're just
Right.
like
Right.
running your business and the deals are just showing up. And so that's where I was thinking, I'm like, why aren't more property managers doing this? So that's my question. Why are more property managers not buying their own portfolios? Because it's not happening.
Yeah, I think kind of what you said, there's that mental hurdle of, all right, I need 60,000 for this deal and I'm going to save up some cash and then I'll go do it again. And that was kind of my mentality starting out. And I've set this auto transfer, I probably 7 years ago, right? Once my property management company was profitable, I started transferring. I think it was like $2,500, then 5,000. And I might have gotten this idea from Mark Cunningham. I can't remember, but I would just set an auto transfer that I would put this into a RPM savings account, right? So I would let that build up, and then when it gets to 30 or 40,000, I would go buy a house. And that was kind of slow way to do it, right? And then I took advantage of some favorable interest rate environments, that we saw, over the last 5 years, and was able to get cheap debt and refi some properties as they appreciated. That's kind of ground to a halt the last 2 years with interest rates. So a lot of it was dumb luck and timing on that side, but I just kind of always had the idea that I didn't have to have the down payment money sitting in my checking account before I would write the offer. I would figure out a way that I would get it. If it was 100,000 down on a duplex, I might have had 30,000 sitting in my savings account, but I would make the offer at a price where the numbers worked. And then I would go talk to clients or employees or, family and say, hey, here's this deal. I've got it teed up. And, would you be interested? And you've got a due diligence period, usually 30 days, maybe shorter, where if you make those 10 phone calls and everybody goes, man, this is a stinker, like I wouldn't invest in that, then it's probably not right. And you let the contract go and you back out of it. So I think having the confidence to just jump in with both feet and know that, you'll waste a little bit of time, maybe a little bit of money, but you can then go out and find the deal and find the investors to partner with.
This is great. So I'm guessing those are non-binding deals, right? So you had the ability to think about it. So you can make an offer and they said yes. You have to kind of check yourself and be like, well, they said yes. Was that offer as good as I thought it was? And then you use the fundraising to actually validate your decision, right?
Yep.
And then that would help you be like, yeah, this is a good deal or it's not. And then you could get out of the deal without a whole lot of loss, just maybe some time, maybe a little earnest money. It's not a big deal. And you'd rather do that than go on that deal, right?
Exactly. And every time you do that, if you talk to, 5 or 6 people, they may not have any, investable funds at that time. But you try them again the next time out and then the next time and they go, oh, actually, I just sold this or, I came, got a bonus or something. So yeah, I'd like to do something. And then you're kind of top of mind. And I do have people that email me and say, hey, do you have anything in the pipeline? I'm about to sell a property. So you're kind of solving that investment problem for them.
Money needs to move. Something, money does not do anyone any good just sitting around doing nothing, right? Money's got to move. So more people that need to move money,
that's right.
The more problems you can solve. So I love that. Okay.
Yep.
All right. So I know we're getting close to time. You answered a lot of the questions I had, which was great. And a big takeaway too is definitely when people feel like it's insurmountable to do a deal by themselves, they need to co-venture, like they need to join venture. They need to partner up with somebody. Sometimes that's a syndication. Sometimes that's just like I make an offer and then I call my friend Ralph and I'm like, Ralph, like I need an extra 40,000 to make this deal work, but it's a great deal, right? And then we do it. It's better to own, half of a pie than none. Right.
Exactly. Especially when you're going to get the management business, you get a little.
That's a great point.
Yeah.
Great point. Okay. So your time though, let's think about your time because you run the property management company. If I had a pie chart of where your time goes, How
Yep.
much are you focused on property management and how much are you focused on real estate investing or something else? How do you split up the day?
Um, I would say in a given week, 5 to 10 hours of my time is on the property management business. And I've got a great team in place that kind of runs that. So the other 30 to 40 hours is, dealing with existing investments, doing the asset management, or, finding new deals and talking to investors, which is, where my passion lies, and is the networking and, putting all those parts together. But, one thing I have found, you mentioned, the partnerships, is through the property management business, I've made it a point to kind of be a mentor to my employees and help them with their own investments. So we started a program back in 2019 where a property manager on our team could find a deal, bring it to me. They would do all the work, all the sweat equity, handle the rehab. It was a lot of kind of burr transactions, but I would sign on the loan. I would provide the down payment. They would pay me back over time, but they would get 30% of the deal just for running it. So as a way that they could think like an investor, they've got a higher level of conversation and expertise when talking to our owners. Oh, I just bought a property in that neighborhood. This is what you should be thinking of.
Wow.
Things like
That's your
that.
team.
So
You're talking about your team. The
my
people.
team, yeah.
Yeah.
So we've done right now 11 different employee partnerships where, they bought rental properties, and some of those people have gone on to, buy another, 10 or 12 houses, just because we got them started. So that got their, foot on that property ladder where they could build some equity and use that to go do more deals.
Love it. Is the contracting hard? Like if my team comes to me or somebody like this, like, everyone says like gotta have the right deals. Like, is that easy, or are people making a bigger deal about that than it is?
You're saying the rehab work and the contractors?
Oh, sorry, not the work of but the contracts. Like you're throwing
Oh.
some money in and it's someone else, like who's controlling the deal? I
Oh.
feel like a lot of people get caught up on like,
Yeah.
what if they screw
Yeah.
me? Like, do I have the
Yeah.
right contract? Like, is
Right,
it
right.
like, what are your thoughts on that?
Yeah, I mean, when I started out, I was trying to save as much money as I could on legal, and I learned early on that that was, the wrong place to pinch pennies. So I always have an attorney draft an operating agreement. They make sure everybody's interests are secured and there's documentation on all this. I don't care if I do a deal with my uncle who I've known for 30 years. I want to have it in writing and spell out who owns what and who's invested what. So yeah, it doesn't take much, maybe $500-600, and you can get a good, protect yourself on that front.
I ask because I've heard that as an excuse for like, oh, I want to join venture, but what if I get, like it's just like you got to do so much stuff. But what I've seen is it's really not like attorneys know what they're doing. Just give them a call and be like, hey, we got 2 people, like write the bullet points out, give it to the attorney. They know what to do.
Right.
Just get clear. I always say like never write a contract until everybody's clear on what you're actually agreeing to. And then that cuts the attorney bill in half.
Right. It does. Yeah. And it's also, it's a protection for, my family and your family if we're partners, and your heirs. If something, God forbid, happened, then they want to know exactly in black and white, what they're entitled to. And that's why I always put that at the front.
Love that. I've said that a lot too. Like contracts are even more for like the unthinkable. Like something happens to somebody, that's when they really come in handy.
Sure.
That's amazing. So, all right, last question. I'm a property manager. I got like 50, 60 doors. I'm eking it out. Times are, still tough. I'm still in the making it years.
Right.
What's your advice? Like, how do I start building a portfolio? Should I be focused on a portfolio? Should I not? Like, what would you do if you're back in the 50 door day? What would you do?
Yes, I would be focused on it. If you've got 50 doors, you probably have, 35 or 40 clients. I would take them all out for coffee or lunch and just say, how did you do this? What kind of, returns are you looking for? Would you be interested if I found you a deal? Could I help, source this and be that arm for your investment business? Because you never know, of those 35 clients who wants to get to 20 properties and who's just happy with one. So just constantly ask them. And for me, it was also an educational, just to jump in with both feet and do these deals. I kept hearing my investors and clients talk about, this strategy or that strategy. And I never listened to Bigger Pockets or didn't know anything. And I thought, gosh, I got to figure out what a cash on cash return is, or, I got to figure out what BRRRR means, or, house hack. And, so they were using all this industry jargon. And I thought, well, the best way to learn is by doing a deal and, buying a property and rehabbing it. And so it will position you as the expert if you just start, even when you're small, talk to those folks and see how you can help them.
Amazing. Yeah, I love that advice. Just literally take your clients out and be like, how'd you do this? I don't think anyone's thinking that.
Right.
All right, I'm gonna sneak in one more question because I didn't ask it, and this may be like a non-starter. You may be like, no, never. You ever get owner financing? You ever like had an owner? It's like, I got 20 properties, I just want to get rid of them, and you're like, they're giving you terms. Have you done any of that?
Yes, I have sniffed around that. I did one where we bought the property and there was adjacent land, and I said, well, I don't want the land unless you own or finance it for me. So we did that, and I'm actually under contract right now on a property where the seller is going to take back 500,000, so I don't have to bring any money down. So yeah, I dabble in that, but it's there's always a little tricky.
Well, yeah, it's creative, but just thinking as owners retiring and they're worrying about tax liability, I've heard more and more stories about where it's actually beneficial for the owner to not just for you to not go finance $6 million and write them a check, for them to like do kind of like make that money over time.
Yeah, for sure.
So yeah, I was just curious. I think that's something I've been thinking a lot about. If I've got a big portfolio and I've got people that are thinking about retiring, I'm like, hey guys, like I got a retirement plan for you. Just owner finance your portfolio, take it right off your hands, lower your tax bill, right?
Yeah. Well, I would love to owner finance a property management company. So if anybody's out there is listening, wants to buy one, we'll give you a deal.
Yeah, exactly. Businesses and properties can be owner financed.
Right. Yep.
I think we should maybe a round 2, Ralph, we'll talk about that because I think there's a lot to be done with owner financing. Well, thanks. Any last words before I sign off the recording?
No, keep up the great work at Rent Scale, and I'm excited to read your journal when it's out. And thanks again.
Appreciate it.